Time to check out our grain markets once again, and here on the corn market today, as we look at the big board in Chicago, we start with that July contract. Remember, we had the May futures that expired last Friday. We go into delivery mode on the May contracts tomorrow. Now, on July, we currently have it trading at 363 1/4, and that is back to 2 cents higher. It kind of slid off the earlier highs today, and it's regaining a little bit of momentum here. We have December now 2 higher at 382 3/4, and make that now 383. It just changed, so ticking upward just a little bit. Meanwhile, in the soybean trade, it had been higher overnight, then it sold off in the early morning hours. It's been a tug of war here. Right now we're a little bit higher, but only on the nearbys. We have July soybeans a half higher at 867 1/2, and November down 1/4 cent at 887 1/2. What about on the wheat market? Well, in Chicago wheat today, we now have July down a nickel at 437 1/2. There's been a lot of interest watching that Kansas City market. Is it going to hang on to $4 or not? Let's take a look on the July KC wheat today. The last trade, 401 3/4. That is down 5 3/4 cents. It actually got as low as $4 1/4 cent. Got within one tick of hitting $4. Didn't quite hit it, at least so far today. It's still early, though. On Minneapolis wheat, we have the July contract 3 1/4 lower at 508 1/2. And in the cotton market today, we have that July contract there, now quoted at 76.97. That would be down 73 points. In December, down 49 at 75.70 cents per pound. Todd Bubba Horwitz joins us now. He's with BubbaTrading.com. And good to visit with you as we start out our new trading week here. We only have 2 short days before the end of the month. Is that going to come into play here?
Good morning, Marlon. I don't know. I think, we've got markets that are just really dull and really dreary. And unfortunately, commodity markets, when they're dull and dreary, tend to drift lower. And every rally has been met with some selling. And I think what we saw here is you saw everything was higher overnight, including wheat. And all of a sudden, you come in this morning, wheat's lower and soybeans are getting near flat, and corn was up about 4 cents. Now it's up about 2. It's a real challenge in here because you've got really very little activity going on, but you've got the hedge funds and the big funds that are just putting so much pressure that they're trying to force the weak hands out of the market.
Todd, you and I both know there's an old trader's axiom that's as old as the hills that says you never sell a quiet market. So why are they continuing to sell it?
They're looking for places to go, and they think that they can take advantage of that market and really squeeze people out and squeeze some of the funds out and actually maybe force the banks to go into some forced liquidation, which could really crack the markets. I don't see it that way. I think that, again, they could go lower, but I think we're very close to the end of the run here. Now, we may not go right back up again, but I think that as far as how much farther they can go, yeah, sure, there's always room to go down, but I think that I think they're personally making a mistake, and I think that, again, it'll backfire. But for right now, they're still in full control, and as we say, the strong hands are pushing very hard to the downside.
All righty. Did want to point out we got some new export inspection numbers that just came out a little bit ago from USDA. Wanted to kind of point those out. On the corn, 1.37 million tons that were shipped out of the country this past week. Almost identical to last week. Now we had soybeans 491,000. That was up significantly, almost a third over what we had last week. And the wheat 630,402, and that was down from 819,000 last week. All right, we'll come back in just a moment and we'll talk more with Todd Bubba Horwitz about our livestock trade on the other side of these messages. We are talking with Todd Bubba Horwitz of BubbaTrading.com. And we're going to turn our sights now a little bit, and we'll see what's going on in the cattle market and the hog trade today. When we last left you, we had the hogs gaining back some of what they had lost early in the day. We'll start with the cattle market here, get you updated on prices, and then we'll get to the hogs in a second. Right now on the live cattle board, we currently have June futures down just one tick now, and now unchanged at 115.05. So they have successfully clawed their way back. 115.05 is steady. We have August up a dime now at 112.75. The deferreds are a little bit weaker if you go beyond that. On the feeder cattle market, we've had triple-digit losses today. We still have August down $1.35 at 151.50, but the far-out deferreds from September on out are 82 and 50 cents if you look at September and October respectively there. And if you look at the lean hog trade, there we had some fairly sharp losses early on today. Now, May still is down over $2, but all the months from June on out are moderating a bit. We have June down 45. We're at 88.30. We have July down 70 at 92.75. Wanted to point out we got our new cutout values in too. Beef cutouts just came out. Our midday update shows choice cuts up 23 cents. Selects up $1.17 on the beef side. How about that? And if you look at the wholesale pork trade, carcass values this morning were down $1.18. And we had the loin values down 50 cents. We had the ham market down $3.85. Exclamation point. And belly is down $1.01 at 123.98. So a lot of weakness in the wholesale pork, but strength in the wholesale beef trade. Is that helping to hold up the futures market here today, Todd?
You know, Marlon, I think we're at a must-hold level in both fats and feeders. We're at the very bottom of both ranges, and they are both in danger of breaking down. I don't believe that they will, but certainly they need to hold, 115, 114 and a half in the fats, and 150 in the August feeders. Those are pretty much must-hold areas. I think if not, we could get ugly, but I do believe that they're going to hold, and I think hogs probably have a little bit more downside. But I think now is the time. About 86 to 87 is about the time you want to start to look to get back in to the market, because now we've traded out all that fear from the African swine flu and what was going on in China. So I think overall, I'd like to be long these markets, but I am getting a little bit concerned that they may be breaking some support.
Do you think the funds have bailed out of very many of their long positions on livestock?
I think so. I think you've seen a lot of the money come out. We've had a pretty big sell-off here. I mean, last week was really ugly when you look at the overall picture. It's basically down every day. And I think that was a lot of liquidation. And I think now there's going to be a little bit of battle at the support level. And I think it will hold. And I think we'll get back into that consolidation for the feeders back and forth and back into that uptrend for the fats. But again, these are very crucial levels for them to hold. Otherwise, there could be some trouble.
Maybe a little more equilibrium in the markets. All right, thanks for talking with us, Todd. Appreciate it very much. Todd Bubba Horwitz of BubbaTrading.com. He's based around that Chicago area. Always good to visit with him.
All right, as always, thank you very much, Marlon.